Hi, this is Mike Maloney, and I wanted to do a quick update on the gold and silver markets because it has been quite a wild ride over the past couple of days. As you can see here, this is a silver chart, and at the beginning of the month we were up here in the 1920s, 1925 or 26, and we've had a sell-off that took us intraday. It took us below 1720, so a $2 sell-off in silver. And that is quite a percentage move. Now, I've got several charts here that I want to go through and show you if we're on support or not and what the potential outcomes might be. But before I do that, I want to show you something. This is my Insiders program. I'm on my own website here, and I've logged into my account. And there's a whole bunch of different things that you can see that are in the account. The Insiders program is for customers that purchase a certain quantity level of gold and silver. And what I wanted to show you is I've been tracking the Commitment of Traders report for quite a few months here in the Insiders program, and I wanted to play you a little bit of August 16th before I get to my analysis. Hi, this is Mike Maloney with the Insiders Report for Tuesday, August 16th, 2016. And I guess lately I should be calling these Commitment of Traders reports because that's what I've been focusing on. And the big reason is because they have a history of almost always being right. And right now they are heavily short gold and silver. One of the things I wanted to point out in this... Now I'm going to skip to about the 553 point. Where do I think gold and silver may go? Well, I've got a silver chart here, and what I've done is I've drawn a very simple trend line that just touches these three major bottoms, and there's almost a fourth there. But this is a very, very good trend line for the support region. There's another trend line that you can draw across the tops here that's a pretty steep trend line. But what I think is going to happen is that over the next month or two, that we should drop probably at least to this roughly $18 area. This is a support resistance zone where you've seen other times where the price has been in this area a few times. It's a good target. Another zone might be around this $16 zone, but the 200-day moving average has already risen above that. Now, if it violates this uptrend line, so somewhere 1750, 18, if it happens 3 months from now, it would be at up toward 19, closer to 1850, 19. But if it violates this uptrend line, then it's possible that we could see the bear market resume for a short time, and I have been expecting a deflationary crisis this time around, and so you could see gold and silver take one more drop, but that's a good thing, and here's the reason. This is just like a slingshot or a bow and arrow. The further you pull back on that bow before releasing the arrow, the more energy that is in the shot, and the higher the arrow is going to go, and the quicker it's going to go. And same thing with a slingshot. The further you pull back on that, the harder you launch that rock, and the further it's going to go. And so if you want to see highs go as high as possible, and if you want to make the biggest possible gains that you can in gold and silver, then this really, the further that this pulls back and the more gloomy the picture gets for precious metals, the better it's going to be for anybody that's a precious metals investor. And so, I'm not too worried about this. I'm looking forward to it. I'm going to do, I accumulate every month, but if it does fall down into this region, I'm going to make some much larger than normal purchases. And if it pulls back even further to the 200-day moving average, I will make another much larger than normal purchase. And if it violates this low, there will come a day where I just back up the truck and I bet pretty much everything. So that's it for this report. Thank you very much for listening, and we'll see you next time. So that was August 16th of this year. So that's almost 2 months ago at this point. I've been watching the commitment of traders. Now, I did purchase some silver because a bunch of technical analysts had turned bullish, and because we were running out of the Ajax silver rounds, and I wanted to get some before they were all gone. And they were gone about 10 days after I made the announcement that I was purchasing some. So they are all gone now. You can't get them anymore, even though the price has dropped. But I recently made a purchase here, and I want to play you a little bit of this one and show you some of the analysis in it and why I made that purchase. And it's because silver dropped into the zone that I was looking for. Hi, this is Mike Maloney with the latest Insiders Report, and I just made a significant purchase of silver. And my reason is, as you know, as an insider, I've been giving you reports on the commitment of traders. I've been watching that very carefully for the past few months. And I've been looking for a buying opportunity, and I was basing it largely on the commitment of traders. I made some small purchases and my normal monthly purchase. I made one purchase based on what some other silver commentators were saying, precious metals analysts, about the market being quite bullish. But the commitment of traders had not changed. And so I was watching this, and I figured if you go back to, I believe it was one of my August Insiders reports, you'll see that I drew this trend line. And I was saying that silver would be a good buying opportunity if it came back to this trend line. And pretty much today it did. Now, I think that it might go a little bit lower. I'll talk about that in just a minute, the reason why. But what we have here is this green area is a support zone. There are lots of purchases and sales in this, lots of buyers and sellers in this price range. And we got into that price range, and we're almost, it almost touched this trend line that's drawn underneath these previous dips. And so I did take a position today, and I'm going to be probably purchasing quite a bit more if it drops anymore. I expect that it could. The 200-day moving average is still rising. So this might bounce around a little bit and then take a little bit further dip. If it violates this trend line, I'm not sure what will happen if it violates that. But every once in a while, these metals have to go back and revisit their 200-day moving average. And so we're pretty close to that. I drew some Fibonacci retracements also, and it came close to the 50% retracement. The 50% retracement is right about this area right here. So in just a few weeks, the 200-day moving average and the 50% retracement from the December low to the July peak in silver's price, silver will have dropped 50% from that this entire move. And so that's important. But the reason I think that it could go lower than this, just touching this trend line, is because this is the last month of silver's price action. And what you see here, these are called candles. And just to give you a little background on candles, if it's a clear body candle like this, a white body, the open is the lower large portion of this candle, and then during the day it'll swing up and it'll swing down to these extensions and then close at this fat portion, the upper portion of if the candle is red, it's the opposite. It opened at the upper fat body of the portion, it swung to the these extremes during the day, and it closed down here. Well, now we've been following the commitment of traders reports, and the commercials are very, very short. And the thing is that if they had been short covering during the day, I mean, they've got some very, very large positions. If they had been closing out these positions, this bottom, the wick, the tail that sticks out here, should be a lot longer than that. In other words, it opened here, it should have swung down, and then if they were covering, this should have gone back up. And it didn't go up very much. It only, the difference between the extreme low of the day and the close is very, very little. And so that means that a lot of them are still short. And so it could drop some more. You could see some, but when they start covering, it rises. And so, they only come out with this on Thursday, so I won't have this until Friday or the weekend for you, the latest one. This is last week's Commitment of Traders report. And you could see that they were very short, and I have been waiting for a move like this. And so I took a significant portion of cash and bought a sizable chunk of silver today, but I still reserved a little bit of cash for buying more later. Now with gold, there's no trend line that I can draw. If I draw a trend line, we've already busted through the trend line just in this sideways motion, because you've only got these dips here and then these couple of touches right there to draw a trend line, and it ends up in this area. So the trend line wasn't worth drawing. So I did some Fibonacci retracements from the low in December to the high in July, and we've almost come down to the 38.2% retracement, and it just so happens that the 200-day moving average is right in the same area. I call that a double magnet, and it's a support zone. Look at how that 38.2% retracement exactly was the support zone for this bounce here that we had. I mean, it wasn't a 38.2% retracement when that happened, because this high did not exist yet. And so, but looking back from there, look at how it was the 50% retracement ends up being a support zone for all of this area, and that 38% was a perfect support zone for that bounce. I think we're probably going to see just a little bit more downside, and then there will be some short covering, which will start propelling it back up, or at least into a sideways chopping pattern. So those were the reasons that I took my position. I only bought silver today. I didn't buy any gold. So gold, again, very large short position on the hedgers. It will be the report that comes out on Thursday is going to be there. You're going to see a significant drop, maybe into this area. But if they're still heavily short, I mean, the drop may be larger than I think it's going to be, but I have a feeling that they're not going to cover all of their shorts, and that we may have a little bit of downside left. So I took a position where I can still purchase a little bit more later on should it fall some more. So that's it for today. I just wanted to update you on that. You're going to see, so that was October 5th that I came out with this. I actually purchased the night before, after hours. Anyway, this is what you get with the Insiders program, and now we're going to get to the current analysis. And as I said, I showed that silver had dropped, and I made my purchase right here, but I said it could drop some more, and that it was probably could go and visit the 200-day moving average. Well, this little blue smudge here is the 200-day moving average coming into frame. And if we go to the next chart, this is gold. And one of the reasons I thought that silver should probably go a little bit lower and violate that trend line is because it really did look on the chart like, the 200-day moving average and the 38.2% retracement had lined up so well, and this previous dip here as a support zone, I was thinking that that triple magnet of those things should sort of pull gold down into that region. And if we take a look at silver, it did violate that trend line. It went right down to the 200-day moving average, as I said. This is a good place for both of the metals to bounce. And here is one of the reasons why. This is the US dollar index. And as you can see, when gold and silver fell, the US dollar was rising. And that's very typical. But the US dollar has now hit the top of its trend line. And this is a good place for the dollar to be repelled. Now, if the dollar busts through this, this is a symmetrical triangle or a pennant. It's not up tilted, it's not down tilted. And so it's possible that this could break to the upside, and if it does, it'll probably keep running for a little while. But it is resistance. It's a good place for it to be repelled from. And if it's repelled from this upper trend line, then that means that gold and silver will probably take a bounce and do some sideways action. Will they continue above their 200-day moving average, and will they rally again? You know, nobody has a perfect crystal ball. But gold and silver, as I've said before, are the only things that come with a central bank guarantee. The central banks around the planet they absolutely guarantee you that they will continue printing currency forever. They're going to always create more and more and more currency simply because the way the monetary system is currently designed, it can't operate under deflation. And so they have to continuously inflate. And so as the quantity of currency in the currency supply becomes larger and larger and larger, the other items that are also considered safe haven assets and considered money one day end up doing an accounting for all of that excess currency. And gold and silver are those items. They are the items that benefit from reckless currency creation by Keynesian central bankers. And one day they are going to complete this accounting, and it is going to be spectacular. So I did make a purchase of silver right here at the bottom of this. I'm probably going to be picking up some more. I missed the intraday low. But do I care about this last 40 cents? No, I don't care about it whatsoever. I'm really looking for the really big picture. I like buying down in the 17s rather than up in the 20s, and I've been waiting for that since, I do my normal monthly accumulation every month, but I have been waiting for gold and silver to make this pullback, to make a much larger purchase, and I did that a couple of days ago. So thank you very much for listening. The Insiders program is still available for people that make qualifying purchases at goldsilver.com. And I put together some sort of market analysis once in a while, and I always let people know what my purchases are and what my exit strategy is, because if whether you buy at $500 gold or $1,000 gold or $1,500 gold or $2,000 gold, if gold goes past 5,000, 10 or 10,000 or 15,000, are you really going to care exactly what dollar figure you purchased it at? It's as long as you've got it during these crazy economic times. That's the way I feel. I don't give advice to anybody. I tell people what I'm doing. And this analysis on these charts here is the reason that I made my purchase. So I show people what I'm doing, and my insiders always get to know what I'm doing the day I do it or the day after I do it. So thank you very much for listening. I hope this gave you some comfort, because if you're a precious metals investor and you're worrying about this pullback, you really shouldn't worry about it. Gold and especially silver are so incredibly volatile, and it's a roller coaster ride. But take a look at the long term, what it's done since the beginning of this century, and you'll see that it's been the best asset class to be in. And there's going to come a day where it does the accounting, and you are going to be so glad that you were there if you've got the stomach for it. I do have the stomach for it. I made a commitment back in 2002 and 2003, and I have stuck with it ever since. Thank you very much for listening. We'll see you next time.